Hey guys, and welcome to weekend analysis session, and in today's video we'll talk about the gartley pattern that is setting up on Euro-Yen daily. This setup, this pattern will most likely be completed next week, and well, we will also do a backtest of that pattern to find the best entry, to find the best B point ratio, C point ratio of that pattern. We will also find the best stop loss and best targets of this pattern. So we will only take that pattern variation that provides the greatest expectancy based on the backtesting, not simply based on what others say in the books, not simply based on what numerous coaches and mentors teach in their training courses, but based on real history of the chart, based on statistical data. Okay, first of all, the first thing we need to do, we need to identify our patterns, and to identify patterns I use MPS. Absolutely mechanical identification using algorithms. Very simple, no human mistakes, no human subjectivity. And let us set the properties of this pattern. So the B point will be this, C point this, D point this, stop loss this, and targets this. I deliberately made these B points and C points expressed through decimal numbers because I dislike Fibonacci's, and if you don't know why I dislike Fibonacci, you are welcome to visit my YouTube channel and watch my earlier videos when I discuss why Fibonacci don't work in markets. Okay, a small teaser for you: Fibonacci don't work in the markets because markets are not natural phenomena. Okay, they are artificial. Okay, if you are interested, watch my previous videos. So, decimal, the range of these B point and C points is extremely wide. We will first backtest all those possible patterns, and then we will refine those ratios that actually don't work or that work not good. Okay, and so we will end up with those patterns that perform the best. And that's it. Let us start. Less words, more action. To do a backtest, identify a pattern is only 1/3 of the work. Second third is to actually record all those patterns into Excel spreadsheet files, actually collect that data. And the last third of the backtest work is analyze the collected data. So identification, collection, analysis. So the identification is done by MPS. Data collection will be done by FBU. We can find FBU in MPS folder. Okay, and then we will do the analysis. Go into the very beginning of the chart. So let me show you how FBU works. It creates this backtest Euro-Yen file. Right now it is empty, so we have no lines here. And if I do some stuff, if I do some work, so we have this pattern, it hits stop loss. I am using target 1, target 2, target 3, so I will backtest 3 targets at the same time. And this very trade, it actually was 3 trades loss, 1, 2, 3. That's it. Trade is recorded into this very backtest file, so we can find it. Trade 27 of July, 1998. So we have 27 July 1998. The entry is 155.892, 155.892. Stop loss 158.38, 158.38. Target 1 53.404. We can see target 2 50.91.6. So this is target 2. And target 3 is 48.42.8, 48.42.8. So you see, it backtesting is lightning speed, absolutely fast. Okay, close this, don't save, expand, and let's record other trades. So this one is 3 target loss. This one is 1 target win and 2 losses. This one is 3 target win. Potential trades, they also stay, so we can later analyze these potential trades. maybe we need to optimize our entry because many of those potential trades never complete. This one, 2. This one is, so backtesting process is kind of a video game. This didn't complete. This one, let me zoom it in. Okay, target 1. This one loss. This one is a 2 target win. This one is 2 target win, 1 loss. This one is 2 target win, 1 loss. This one is 3 target loss. This one is a 1, 2, 3 targets win. This one is 3 target loss. Again a loss. Click on the pattern, click on the completion candle, and then type if it was a winner or a loser, or if it was a reversal or a continuation. So if price actually reversed at that projected level, you type it as a reversal. If it didn't reverse at projected level but continued through, then it was a continuation. Okay, there are many winners and many losses. I suppose target 1 is somewhat 60% to be hit. I'm not sure, that's why we did the backtest, but it looks like we have a 60% to hit target 1, maybe slightly greater. Okay, yes, this one is a loss, this one is a loss as well, and this one is a loss. Okay, never completed. This goes to 3 stop losses, 3 stop losses. And this one is okay. That's it, backtest is done. Now let's go to our file. We open our backtest Eurjpy, probably need to expand that. So here are trades that we collected. Here's the data that we collected. Now we need to analyze that data, and what we need to do, let me do it this way. Let me split the data based on trades: trade 1, trade 2, trade 3. Okay, let me create these sheets, 1, 2, and 3. So here I will place the target 1. Sorry. Copy. Paste it. Here I will paste target 2. Copy and paste it, and I will paste target 3 into the third Excel spreadsheet. Okay, copy and paste it. So we do 2/3 of our work. We collected data. Now we need to analyze this data. First thing that we need to do, we need to calculate how many pips we generated. So we start from 0, and then we do the following. Every time we have our result, yes, we add our result to previous result. Previously we had 0, that's why we have something. Now we should double click on this stuff, and it automatically substitutes all that formula here. So we generated 2400 pips with target 1. Okay, next thing we need to do, we need to calculate the following data. So we need to calculate total number of trades, wins, losses. Then we need to calculate probability of win. Sorry. Then probability of loss. Then average win, average loss. And then we calculate expectancy. And then probably we need to calculate average risk to reward and our expectancy. Okay. To calculate total trades, we use this formula. Count, then we show the range, and all numerical numbers will be calculated. So totally we had 48 trades. To calculate winners, we use this formula. Count if. Again, this range, and we should specify the criteria more than 0. Only calculate positive numbers. Calculate losses, we should use this formula. Total minus winners. Very simple. So what is the probability of win? Probability of win is this: winners divided total. Probability of loss 62%, by the way. It is losses divided total. Okay, so this is probability of loss. So what is the average win and average loss? We should use this formula. It is average if within this range of result we find more than 0. Okay, so what is the average loss? Control C, and we paste it here, Control V, and we simply change that stuff to less than 0. So our average loss is this, our average win is this, expressed in pipsages. Okay. Next thing we need to calculate is the expectancy. To calculate expectancy is we should use the following formula. Win percentage multiplied average win plus loss percentage multiplied average loss. And because our average loss is negative, that's why plus will be turned into minus. And we have 50.57 pips expectancy, 50.6. We expect to generate 50.6. So if we will do 100 trades, yes, so we will generate 100 multiplied 50. How many pips we will generate? We will generate 500 and something pips. So if we will have 48 trades, yes, so let us have this 48 trades, we will generate 2,427. So how much we generated? 2,427. You see, what is expectancy? It shows you how much you will generate after some number of trades. Okay, then we will calculate the average risk to reward, and average risk to reward is calculated the following way. We should divide our average win by average loss. I made that minus average loss, minus by minus makes it positive. Okay, so this is the average risk to reward. To calculate R-based expectancy, we need to multiply our win probability by average win and detract our loss probability. So the R-based expectancy, it shows how much we generate in terms of risk. So in each and every case, we generate 0.34 of what we are risking. So if we risk 1%, so we generate 0.34 of percent. We are generating something. If this number is negative, this means that in each and every trade we are losing something. So as long as the expectancy is positive, this means that the strategy is generating money in the long run. Okay, now let's continue. Simply, actually, if we compare these two expectancy numbers, let me make them this and this. Using different targets, yes, this expectancy and this expectancy, using different targets, we will find what is the best trading methodology. So copy here, then we go Control V to paste it here, and we go Control V to paste it here. Well, obviously this is 0.52, it is greater than 0.34, and 0.59 is the greatest. So with target 2 we have the greatest expectancy. This means that in the long run we will generate the greatest amount of money. Okay, yes, and the pipsage expectancy is the greatest. Okay, if we have the greatest expectancy of all, this means that our equity curve will be the highest. So our equity curve is 45.58. Here we have 24.27, and here we have 40.52. Of course, 45.58 is the greatest. So the greatest number of pipsage generated. I also told you that we can refine our B point and C point ratios. So let's do some refinement. Let us go to filters, and let us first check these ones. Number filters between 0.3 and 0.4. Okay, so loss win 50%, and the sum is positive. Okay, perfect. The B point range is okay here. Let me do some further refinement. So 0.4 to 0.5, we can check it. No trades with such ratio. Then we go 0.5 to 0.6. Now it is closer to the range of a so-called bath pattern. So the result is this, and this. It is a positive result. Okay. Now we will go to the next result, 0.6 to 0.7. Okay. And the result is positive again, and then we will go to our 0.7 to 0.8. And here the result is positive again. So as you guys can see, all those ratios, 0.3 to 0.4, 0.4 to 0.5, 0.5 to 6, 6 to 7, and 7 to 8, they all produce positive results. So it doesn't matter what is your B point, as long as it is within this range of from 0.3 to 0.8. You see it, they all produce positive results. Now we can refine some C point ranges. Yes, and again we go to this between. We know that we start from 0.3 to 0.4. Okay, results positive. That we can do that mechanically, of course. I can calculate a specific formula, and this one is positive. Then we go further, but I'd like to do that, type in manually. There are many ways to refine those ratios. Positive again, and from 0.6 to 7. So it goes positive again, and then let us change this from 0.7 to 0.8. Okay, positive. And then we have 8 to 9. The result is positive, and the last one is 9 to 1. From 0.9 to 1. Come on. Okay, the result is positive. So all ratios produce positive results. Okay, so it requires no refinements. In case some of those ratios producing a negative result, we simply go to MPS. Yes, for example, somewhere in the range of 0.3 to 0.5 it produces positive result, from 5 to 6 it produces negative result, and then from 6 to 8 it produces positive result. So we would do this way. So from 3 to 5 we type it here, and then we enable second pattern, and here we type it from what I said, from 6 to 7 negative, but from 7 to 8 it is positive. Yes, yes, we will have this way. So the first pattern is from 3 to 5, then 5, 6, 6, 7 is missed, and the next one is 7 to 8. So it is very easy to do that. By the way, the number of patterns is unlimited in MPS, so you can create as many patterns as you wish, simply adding these patterns into special files that control the settings of MPS. Okay, that's it for today. Hope you like this video. What was that pattern, by the way? If so, give me your thumbs ups. Target should be 2, stop loss should be 1, the entry should be 8, and it will be okay to have 0.3 to 0. Okay, so this is the pattern. Let me zoom it in. And target 2. So the best one, as we just found out, is to use target at 118 0.64. It is the optimal target, and the probability for this target to be hit is 52%, more than 52% to have that target. Of course, if you wish this to be hit, to have a greater probability to hit that target, of course you can only aim at target 1. Overall it will be positive, you will generate some money, you will win more often, but less than having target 2. Let's change it to target 1 if you would like to trade it as this. So place stop loss at 1, entry at 0.8, and target as 1-to-1 risk to reward distance, so the same distance as your risk. You will have that opportunity. Okay, that's it about this pattern. Hope you like this video. If so, give me your thumbs ups, share this video on social media, and until then, good luck and good trading. Hope to see you soon.